Good morning, everybody, and welcome to the opening bell here at MarketStream.live. This is where we're going to take a look at all of the action here on the open in the U.S. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's jump right in. We are on the earnings season kick, and the markets are to the upside. You have the Dow Jones futures up 50 at 19,852. Rebounding well after yesterday's action. You have the small cap Russell 2000 up 1460 at 1373 and 20 cents. You have the Nasdaq futures up 850 at 5042 and a quarter, and you have the S&P 500 E-mini futures trading up $5.50 at 2269 even. The markets are firmly in the green. Let's take a look at the action right now on the open and what's gapping up and gapping down. First of all, what's gapping up? Well, we have some merger and acquisition headlines coming across, and we take these with a grain of salt, but I want to mention these so that you can get some context. Pandora Media is back in. Ticker symbol P is in the news. Trading 1301, up 8.5% today. There is headlines coming across that there is from the New York Post that there could be a merger between Sirius XM, SIRI. Also, there's an expectation that they're going to exceed Q4 guidance. So we're going to watch Pandora into earnings and watch that headline. We also saw Sanchez Energy. This is a small oil and exploration name, ticker symbol SN. It's trading up about almost 8% this morning at 975. I like to keep an eye on these, especially with crude over $50 now. Anadarko Petroleum is going to sell the Eagle Ford shale assets to South Texas for basically approximately about 2.3 billion to Sanchez Energy and Blackstone Group. So there's some consolidation acquisitions happening in this space. That always makes it interesting, especially, as I said, with oil over $50 and you're seeing nat gas moving to the upside. What is moving in a disappointing fashion and gapping to the downside, some of the notable names on earnings are going to be GameStop, down 9%, trading at $22.50. Can't believe it. I've seen my kids up at that place more often than not. They had lower Q4 comp guidance after the holiday comps. They fell about 18.7% year over year. Video game makers to watch, though, on this news of disappointing earnings and guidance is going to be Activision, which is down about 1% right now on the open, and Electronic Arts, ticker symbol EA and ATVI, both down about 1%. Now, the early response to the financial news that's out, specifically the earnings announcement in the banks, has been somewhat muted, maybe not so surprising. Bank of America exceeded their analyst average earnings expectations. It's up about 0.1% right now. That's despite the fact that they did miss on their trading revenue, and that's going to be something important to watch. We also saw that JP Chase, which topped their earnings estimates, is up about 0.7%, but they also missed on trading. And Wells Fargo, they came up shy. They missed by about 4 cents. But right now the stock WFC is up about 0.4%. Now, again, why do I mention the trading revenue? Well, because this puts on firms like Goldman Sachs and Morgan Stanley on watch, because they don't have the other diverse business units that these large banks and institutions have to make some revenue. Wells Fargo, JP Chase, and Bank of America all have diverse business groups outside of their trading units. Goldman Sachs and Morgan Stanley, they don't have that luxury like the big banks, and so they could come under pressure. The reports, by and large, were positive. They have encouraging economic tones, with average loan balances and credit quality very strong. What was also notable, again, is the fact that we're going to wait and see what the response is now that the news is out, and now with a little bit of just basically holding break even right now, if in fact there could be a rotation, a cyclical rotation, where they're going to go, well, right here and now, these stocks have run up close to 35%. maybe take some off the table. Let's see what's going to happen with rates. Let's see what's going to happen with the policies that Trump's going to put in place. And maybe let's look in the financial space to something more apt to be moving to the upside, like as we discussed last night in Tech Talk, the e-brokers. Should the financial sector, though, come under pressure today, market participants are going to watch that closely. That could put some pressure on this, not only the sector, but the broader market in general. And that could be construed as a sign that the post-election rally might be hitting some headwinds. We're going to watch that very closely as the day goes on. But right now, stocks are to the upside and the financial stocks are moving to the upside with a decent amount of momentum. In other matters on the economic calendar that we're drawing some attention, it should draw some attention this morning, is the retail sales and the producer price reports that came out for December. Now, the retail sales report, it was a bit of a disappointment relative to expectations. The retail sales came in at an increase of about 0.6% month over month. The consensus was right around 0.7%. And sales excluding autos came in at 0.2%. That's much lower than expectations. If you take gasoline sales out of that number, retail sales were flat, folks. This was a clear sign that motor vehicle sales, as well as gas and non-store retailer sales, were the leaders, and we saw that there was clear weakness in electronics and appliance stores, as well as general merchandise and miscellaneous store retailers and food services, which were not highly unexpected since we started to see some of the foot traffic and sales, same-store sales coming out from some of these bricks and mortars that actually service these industries. The key takeaway from the report, though, is that consumers were somewhat guarded this holiday season with their discretionary spending on goods in December, despite the fact that we did see decent wage growth, and we also see that there's reports of increased confidence across the board for consumers. This is likely going to temper some of the forecasts for the Q4 GDP growth, and so we're going to keep an eye on that. Now, taking a look at the Producer Price Index, the PPI, the report was mostly in line with expectations. The index for the final demand prices increased about 0.3% as expected, with core PPI, which excludes things like food and energy, jumped about 0.2%. The key takeaway from this report is that higher energy prices are driving up producer prices. And they're going to continue to support the notion that inflation rates are apt to pick up in 2017. And that's mixed sentiments that are, especially since we had a French finance minister come out and say that inflation forecasts are a little bit overstated. Treasuries did sell off on this news data. The 10-year yield did is right now trading up about 1 basis point at 2.37 after closing right around 2.36% last night. All right, folks, that's all the action that we're going to cover right here at MarketStream.live. Keep an eye on MarketStream.live. We're going to be coming back at 1:30 Eastern Time, where we're going to be taking a look at all the action that's happened in the midday. Till then, have a great trading day, and we'll see you back here at MarketStream.live.